exactly. Instead of a 3-month chart, you got a 3-hour chart. The time frame is just shorter. But the principles behind this are exactly the same. That's why I'm telling you, if you understand the fundamentals and the attributes, right, the elements and the attributes, you can begin to start to apply this in different ways in different markets. So again, composite, it expands across several to many days, relevant for the price area that current price is in. So for example, I don't want to be doing a composite volume profile for prices that are in the 1800s on the ES. It's not relevant to the current market. A user would want at least a swing high and a swing low in a composite profile. An intraday volume profile that is typically specific to a session time and measures the most current activity between buyers and sellers. Should be started at the beginning of a market session. As structure builds, we look for unfinished areas and volume point of control. And the intraday volume profile is considered to be a developing volume profile and is subject to change. So as you begin a day and you get a volume profile started, and I'm going to show this to you here. I've got one going from the beginning of the day. So what I can see is a low volume area at 23.25. I'm going to take these, actually I'm going to call that 22.75. The open is right here at 23.25. These were low volume areas from the pre-market. We have a really nice distribution. Look what we see at the ends here though. Remember this finish, this nice taper? Look at what's happening. Get a nice taper, nice finish. If price comes back up and we start seeing in the volume profile, volume building, even just in the profile, you don't have to see it in the print. If you see volume building here at 30.25 and we start moving higher, what you're going to see is a volume building. That tells you that there's conviction. You confirm it in the print. You're looking for momentum dots. You're looking for the volume cluster analysis to confirm with that. And now you have, as long as it stays a low volume area and price moves above this level, guess what you have today? You have the makings of a good long off of around 30.75. You're going to go back to the print once price pulls back to 30.50, 30.75. And as long as the print confirms, the bid gets weak and the offer starts to get strength, you're going long. You're going long. All right. We use composite and intraday volume profiles to create our trading plans. So I want to be real clear about this. When we start to look at building our trading plans, we use composite and intraday volume profiles. We use intraday only volume profiles and the print to confirm, enter, and manage our trades. So the way this works and how we're going to do our trade planning is we're going to look at some historic composite volume profiles. And remember, I go from outside in. I give more weight to the most current auction. And then as we look at our day and we start seeing how the profile is developing, we're looking for confirmation or not, is the market changing, of what we've seen in our plan, what we expect to happen. We're prepared for price to go higher. We're prepared for price to go lower. If price does this and we see this in the print, then we're going to do this, and this is where our target's going to be. If it goes higher and it does this, then this is going to be our trade, and this is where our target's going to be. This is where our stops are going to be. We have that plan in place. Then we're going to use the intraday volume profile and the print to say, is the story the same? Is what has been happening in the market still the same story? And if it is, I have a lot of confidence in the trade. So I can get beyond trades that I hope will work and trades that I have a lot of confidence that can work and trades that I know I can manage effectively. But we use the intraday activity to actually manage our trades. Developing volume profiles. It applies to daily volume profiles. I call it a developing profile. And markets also that are moving into new highs. Like the one I showed you where it moved into a new high, there was a pullback, moved higher, another pullback, moved higher. And I develop a volume profile for it, but it only represents the swing high, only represents the interest relative to high and low volume areas for the buyers. As a volume profile develops, it will show a potential finish to one side. Here, let me show you this. Here's today. See the finish? See the finish? Is that a good opportunity for a trade? Are these good opportunities for a trade? All of them. You bet they are. Take a look at yesterday's profile. What do you see at the bottom? Nice finish. What I call a finish. What do you see at the top? You see that taper? Going away. Participants are going away. You get up there, you look in the print. Does it confirm? Right there. Confirm the short? You betcha. And what do? I mean, this is so easy. It's funny. You get into the trade. It confirms the short because of the weakness at the offer, the tapering. You get into the trade. This is so easy. You're going to laugh. Let me open this up a little bit more so you can see it. So I have strength. I gotta make this a little bigger. Okay. We had actually relative neutrality in terms of the auction, not strength to the bid or the offer side. We had momentum in this bar. We had a cluster that showed the majority of volume in this cluster came in at the offer. So everything would suggest long, and then it went neutral. I mean, there wasn't continued strength on part of the buyers in this bar, and the profile showed that participants were stepping away. So we had a probe lower, and it came back up. Clear weakness on the part of the buyers. More strength at the bid. There's my short. All I need to do with this trade is, if I get any strength coming back in at 36.75 and 37, I'm out of the trade. Or I put my stop simply about 1.25 points up above this level to see if this is still going to hold. But I can manage this trade effectively if I start seeing strength come back into the offer at 36.75. And the way I look at this is, even if I have to take a break-even trade and price continues higher and I get weakness at the offer again, and the profile doesn't show any more volume, it still shows that nice taper or finish, oh, guess what? I have an opportunity to get back in up here short. And now my risk reward is even better. So the finishes provide opportunity, and when trade moves back up into those areas where the auction looks to be ending, you have opportunity for trade. So an unfinished area, let me see if I can find one. It would be in a developing auction, Dirk. An unfinished area would be in a developing auction. I'll have to find one for you. Typically not. It's a great question, Ben and Dirk. An example of an unfinished auction. Let me do this. It's a great question, and it's hard historically because no, it's difficult historically because you get these finishes. Look at the ends of these days. Finish, finish, finish. I mean, it happens every single day. Finish. Where is Friday? Let me find Friday. Now, those of you who were in the room on Friday and I was talking, I was looking for 1932 as a target. And the reason I was looking for 1932 is because that auction hadn't finished to the upside. And I could clearly see I could clearly see that the, yeah, right up here. And it's not going to show me as well right here. Part of the print too showed that this auction wasn't finished, which is why yesterday I looked for 32 again. For those of you who were listening to me on Friday, I said I was looking for a target of 32. Sellers decided on Friday that it wasn't happening on Friday. So yesterday, when price started poking its head above this 26, 27 level, that was exactly where I was expecting price to go, is back up to that unfinished area. So if I look at today's auction, you know what? Tomorrow morning when the market opens, I'll show you what an unfinished, remind me if you will, I'll show you what an unfinished auction looks like. Because we usually get an unfinished auction to both sides at the beginning of the day. But right now, this is you can see the ends of this, both finished. So remind me. And they don't, right, they don't stay unfinished historically. All the finished market says is right now, at this point in time, the movement to the upside, the movement to the downside is stopped. Now, if that comes at a key level, right? So if it comes at a low volume area, you've planned a trade. Let me just take a look here. You've planned a trade for a long today at yesterday's low. It's a composite low volume area at 20. We get down to 20 and you see a taper and a finish to the downside and you're in long down here. As long as this holds, you have the potential for an amazing trade. Amazing trade. Now, what likely happened here is this showed an unfinished auction at 2050, and when it moved back down, it quickly finished. We had responsive buying, and it quickly finished, and there was likely a decent trade. But when you have that finish and you catch that trade, it's like catching a great wave. The only time you'd want to get out of that trade is if for some reason you started seeing price moving back down towards 21, 2075 with a lot of strength back at the bid. But otherwise, as long as the finish holds, especially at a key level like the previous day's low, it represents a good trade. You can, yes. Question is, would you typically need to load replay data? Yes, and you know, and I can tell you that I'm lost my train of thought, but the the IQ feed data is excellent data because, as DB has talked about before, it gives you true historic tick data. But if you're looking for simple volume profile data, you can get that in minute data as well. Make sure I've got these questions. So, and don't forget now, as we start getting into trade planning, and then Thursday and Friday, I'm going to show you trade entries. I mean, I'm actually going to take my chart, I'm going to take my account, and we're going to get into trades, and I'm going to show you specifically why I'm getting into a trade, where I'm getting into the trade, and how I'm using the print to manage that trade, where my target is based on everything we talked about yesterday and today, where I might scale, why I might scale. All of those things we're gonna get through. You're gonna see the unfinished auction and how it all develops. Yeah, tomorrow, just remind me tomorrow morning, and at the open, I guarantee you we'll have an unfinished auction. Guaranteed. How do you like that? A training course with a guarantee. How many price levels constitute a finish? It's not a price level. It's a finish is really just an area where it shows a tapering of the. But wait, there's more. Where there's a tapering of volume. So just like the Super Bowl ticket analogy, when participants stop seeing value in a specific direction, so buyers start going, it's already gone up, I'm not really going to make any money. They lose conviction. You start seeing strength coming in back in at the bid. The print shows, or the profile shows that they're stepping away. What you will typically see almost all of the time is this finish. You'll see this taper on both edges. In fact, there really are very few days that I ever have where I go back to and we don't have this this tapering, this finish. This was yesterday's, real quickly while I have it up here. This was yesterday's profile right here. One of the reasons that I look for 32 is not just because it's settlement, but you see this thin volume. You see this, it looks like broken teeth right here, high volume here, high volume here. You see this structure right through here? That is a very weak structure in the market profile. That's very weak market structure. And whenever you have weak market structure, and typically is defined by a trend, price moving very quickly up through an area, never coming back, or very quickly down through an area and not coming back. When price moves back into that area, it will typically, now remember, this market wants to build out this this distribution. That's the way the markets work. It's a series of inventory control, people buying, they turn into sellers, they sell, they buy more, people sell, they buy. That's what creates these distributions. That's what creates these bell-shaped curves in almost every volume profile. When the volume profile doesn't create that and it has this ugly area, it leaves these holes, when the market moves back into that area, it typically will fill this in. So what I was looking for is price once above this level, and it just once above this level, to continue up and build out the volume. Actually, at the beginning of the day, what I was looking for is a range between right down here, which is 25 up through 32. And if that doesn't happen, and we continue to get push lower and even some extension lower, then that gives me great information about the conviction level of our current buyers, right? It's gone. It's not there. We're at a point where in the overall market, we have the, bring this up. It's a point where we would look to see price start rotating higher, right? Remember, the market rotates, right? Up, down, up, down. Well, it rotated down. Now it rotated up. Where did it rotate up to? That low volume area, perfectly yesterday, is rotating back down. And what I want to start to see it do is rotate back up here. If it doesn't, if it starts to generate more volume to the downside, well, guess what I'm doing? I'm going over to this data, and I'm going to start looking at the profile data below this area, because this is where it's most likely going to come, is down below this area, and we'll see further movement to the downside. So it's a continuing developing story, and that's how we build our daily trading plans. A weak structure is basically elongated LVA. Yep. Yeah, with one of the characteristics of weak structure is kind of what I call broken teeth. You get these high volume areas, low volume areas, looks like a bunch of piano keys or broken teeth over an extended range. So developing volume profiles, we use typically for the day, and we look to use it to identify the developing structure of the market. So let's talk about a few patterns, and I know we're getting late. I apologize for that. I'm hoping that the information is good, though, and that it's making sense and it's worth your time. Let's talk about a trend day. One of the characteristics of the volume profile in a trend day will be this. We will see multiple price distributions. So we see for example, we see a price distribution here. I don't want to screw anything up, but maybe we see one here. Here's a low volume area. We see one here. Here's another low volume area. We see one here. So you see these distributions, see how the market builds these distributions out as it goes along? And this is just simply because of inventory management, buyers selling, selling and buying, participants selling and buying, selling and buying. But the emphasis is to the downside. And many times in a trend day, what we're going to get, hang on a second, what we're going to get is we're going to see these distributions. We're going to see, in fact, what we'll typically see is VPOC move lower or higher, depending upon the trend. But this is a volume profile signature of a trend day. Now remember, price will continue to move until the other side steps in to shut that movement off. So if we have a trend day beginning to develop, meaning that we get a distribution and then we get a low volume area, we get another distribution, we get another low volume area, and it breaks through, what we will typically see, and you can see it right here, is when price pulls back up to this low volume area, what are we looking for? So far, can somebody tell me what we're looking for? We're going to look for the print to give us our trade confirmation, but what are we looking for in the print at that level? You're looking for a short. There could be a potential stop run. You're right. The low volume area actually goes right on up through there. But what are we looking for in the print to tell us it's time to go short? The offer, exactly. The offer is weak and strength at the bid. Thank you. Absolutely right. So in the print, when we see a weakness at the offer, strength coming back into the bid, we're short. What happens if the strength comes back into the offer? We don't care about that. We manage our risk. We can say, that's okay, because I have another trade opportunity up here. If I see that same activity, weakness at the bid, strength at the bid, weakness at the offer, I'm short again. I don't need to take this up here to figure that out. But this represents a very good trading opportunity, right? Look at what happened here. Price came through. Look what it did. Moved right back up to that low volume area. Same thing we'd be looking for in the bid. And this is one of the ways that you can take advantage of a trend day. There's also, and I think you've seen this before, looking at a structure chart using volume cluster analysis, identifying where volume, let's say price is moving lower, where sell volume or volume at the bid is coming into the market, and draw that trend line. It's another great way of getting in on a trend day. But this is something that's going to show you that the trend, there's a potential here for a trend day. The volume profile with this structure, with this pattern, is supporting the trend day because we're getting acceptance, acceptance lower, acceptance lower, acceptance lower. Okay, so multiple price distributions in high volume areas as price is moving in a specific direction. Trend days are imbalance days. They're typically, not always, but typically followed by balance days, so that it gives us information in terms of planning for the next day. We use low volume areas from the trend profile as potential trade opportunities. I showed you that. When price moves back up, right, that low volume area, once it comes through, is now what, an unfair high. Price moves up, we're looking for buyers to go away, sellers to engage, and we go short. However, if and when an unfair high is broken, it then may become an unfair low. Price will continue to move. You got to remember these principles because you got to be ready for it because you don't know what the market's going to do next. Price will continue to move in a specific direction until the other side steps in. So at the end of a distribution to the downside, right, this is our developing pattern, and we start getting down here and we see some finishing, right? We can't see all of this that's going to develop. If we start seeing responsive buying at these levels, we just need to understand that any trade, any further trade to the downside is at risk. It doesn't mean it won't work. It just means the risk is a little bit higher.